Welcome to the daily insights that matter. Now, the US was stripped of its top-tier sovereign credit rating by Fitch Ratings on 1st August, echoing a move more than a decade ago by S&P Global Ratings. Now, the credit rating got knocked down by a notch from the prestigious AAA, which is like getting a perfect score, to a AA+, which is still pretty good, but not top-notch. Why did they downgrade, you may ask? Now, the reason for the downgrade can be attributed to the actions taken by the US lawmakers in dealing with the debt ceiling crisis. They waited until the last moment to reach an agreement on a debt ceiling deal in the month of May of this year, which put the country at the risk of experiencing its first ever default. Now, it's worth noting that the downgrade was not solely a response to the recent debt ceiling crisis. Fitch Ratings also took into account the overall deterioration of the US fiscal situation over the past few years, along with the growing burden of the government debt. Credit ratings provide an assessment of the creditworthiness of an individual, company, or government. Different rating agencies follow varying practices in assigning these ratings. For Fitch Ratings, AAA is considered the best rating denoting the highest credit quality, while AA+ signifies a high quality rating also. Despite the downgrade to a AA+, the outlook remains stable, indicating that the creditworthiness of the US is still relatively strong. Now, the downgrade of the US rating is an extraordinary event and could have a potential global impact. Now, it signals concerns amongst investors and governments worldwide regarding the economic stability of the United States. Now, in response to the downgrade, Treasury Secretary Janet Yellen promptly addressed the situation, describing it as arbitrary and outdated. Now, she emphasized that the decision by Fitch Ratings does not change what is already widely known, that the US Treasury securities are still considered the world's leading safe and liquid asset, and the American economy is fundamentally robust. However, despite Yellen's reassurances, the downgrade will likely prompt further discussions and attention regarding the US's financial health and economic policies collectively. The Purchase Managers Index, or PMI, is a forward-looking economic indicator that measures the operating conditions of the manufacturing sector. Now, it is based on a survey of purchasing managers who are asked to rate the relative level of business conditions, including employment, production, new orders, prices, inventories, etc. Now, a reading above 50 indicates expansion in the activity, while below 50 indicates a contraction. India's S&P manufacturing PMI softened to 57.7 levels in the month of July from 57.8 recorded in the month of June, and the 31-month high of 58.7 recorded in the month of May. Now, the manufacturing sector nevertheless displayed minimal indications of slowing down its growth trajectory as production process remained robust due to substantial new orders. Additionally, there was a notable pickup in the growth of fresh export ventures, reaching its fastest pace of growth since last November. Now, as a result of the uptick in new orders, the manufacturers scaled up their production efforts, consequently leading to a rise in the employment rates within the sector. Now, solidifying its position as a star performer globally, the strength of the Indian manufacturing sector is fairly evident when compared to its global peers. Now, the highlight here is that this comes at a time when weak demand trends are being witnessed in other parts of the world. Now, despite the manufacturing PMI number for June softening slightly, there has been continuation of improved overall operating conditions for the 25th consecutive month now. The increased activity also indicates resilient demand despite global challenges, macroeconomic headwinds, and a looming global slowdown. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com